All right, so this is going to be the easiest Forex strategy on earth. The easiest one. I'm going to be teaching you how to catch the wick of the weekly candle. It's called wick catching because we're catching the wick of the candle, right? So I'm not going to be showing you how to catch the wick of the daily or the hour or something, bro, because people don't want to tell the truth about it. All those people trying to catch the wick of the hour candle and all that, bro, their win rate is probably like 40%, 45%. This strategy is at least a 65 to 75% win rate all the time. I'm at about a 76.5% win rate with this strategy, but on any given time, any given week, there's a 65 to 75% win rate strategy. It's easy. It's for if you want to place a trade and you don't want to sit around scalping all fucking morning and all that. You want to place a trade, you want to go live your life, you want to travel. I travel a lot. I don't have time to be scalping for 4, 5, 6 hours a day. I know some people that catch 5 trades a day. Like, who does that? I need about 2 trades a week and I'm good. Like I said, this is the easiest strategy in the world. It's simple. I'm going to show you all the steps, what I look for on Sunday before the market opens, stop loss, take profit. When I enter the trade, I'm going to show you everything. It's easy as hell. It's not hard at all. If you are not subscribed, go ahead and subscribe, save this video, because you're going to need to come back to it, because I know how it is, bro. When you see a good strategy that you like or an easy one, you need to be able to come back to see that video. So subscribe to the channel. Go ahead and save the video so that you can get back to it whenever you need. So why the weekly candle? Because there's a higher chance that the trade goes your way and you can hold the trade for a lot longer. I used to scalp like in 2018, 2019. I did not like it. I did not like sitting in front of the charts for hours a day trying to get 1 or 2 or 3 trades a day and waking up in London session or waking up early for the beginning of New York. And I don't like doing that. I like to place the trade, go travel, go spend time with friends and family and just live my life. So if you want to trade like that and you want to live like that, you want to be able to make a lot of money while you're having fun and not stuck in front of the charts for 30 hours a week. When people scalp, they may scalp 5 or 6 hours a day, bro. If you do that times 5, you scalping 25 to 30 hours a week. That's like a part-time job. I'm doing this for time freedom. I trade maybe 1 to 2 hours a week, 1 to 2 hours a week. That's it. That's all I'm giving the markets, 1 to 2 hours a week. That's it. And the reason I can trade for 1 or 2 hours a week because I've come up with a system. I have a swing trader strategy, but that one only gives me like 1 or 2 trades a month. So a few years ago, I came up with this strategy and it gives me 1 to 3 trades a week, solid trades that can go 1 to 3, 1 to 4, 1 to 5, 1 to 6, risk to reward ratio. So if you want to trade like this, watch this video. So before we start, I'm going to just show you exactly what I do, right? So if you have paid attention to the charts on even the smallest time frame, when price has a lot of momentum or is trending real good, most likely what happened the previous candle, the next candle is going to do the same thing, right? And I would say 60 to 75% of the time, that's what's going to happen. So if you see the last candle was a bullish candle like this, right? There's like a 60 to 75% chance that the next candle is going to wick. Let me change this. It's going to wick into the body of this one like this, right? It'll print a big bullish engulfing candle or whatever. Then the next candle is probably going to wick into the body of this one before it flips back bullish, continuing the momentum of the previous candle. Same thing with sales. If you have a big ass bearish engulfing candle, what's most likely going to happen on the next candle? It's going to do the same thing, but it's going to retrace first. And this wick that's wicking off into the body of this one is going to be a retracement on the smaller time frames. So if this is a weekly candle, on the hour and the 4 hour, it's going to be going bullish, right? It's going to flip back bullish before it turns around and then starts going back bearish. So that's what I'm teaching. I'm going to teach you how to get into the wick of this candle, right? So one of the things I'm going to tell you before I start giving you the steps is when I trade the weekly candle, if last week was a bullish engulfing candle on the weekly time frame, Do you know how rare it is for the week after to just be a bearish engulfer now, just completely wipe out all of that bullish momentum from last week? No, most likely, if you had a big bullish week last week, trending bullish, strong, bullish momentum candle, weekly candle, the next week is probably going to do the same thing. It's like a 70% chance it's going to do the same thing. So it makes it easy to catch that wick, because I'm basically waiting for a pullback on the smaller time frames to catch that wick on the weekly candle before riding up and using last week's momentum for this week. And it's real simple. Let's get into it right now. You see this EMA right here. This EMA is a 50 EMA. So you're going to want to put a 50 EMA on your chart. Okay, so after you have that 50 EMA on the chart, you can either use this Gann box. I used to use the Gann box. I don't use it anymore. I use the Fibonacci now. Or you can use the Fibonacci, right? So you can use this right here. It's called a Gann box right here. You can use the Gann box, or you can use the Fibonacci. The levels you want to have are going to be 1, 0.75, 0.5, 0.25, and 0. These are the levels. So go ahead and get your Fibonacci out and add these levels. Everything else, you don't need them deleted off. 1, 7, 5, 5, which is the 50, 25, and 0. Step 1, since I'm looking for buys, I'm just going to make sure that the weekly is above the 50 EMA, and I can see that clearly the weekly is above the 50 EMA. Step 2, since I'm looking for buys, I need the previous candle to be a bullish candle. If I was looking for sales, I would be needing a bearish candle. Since I'm looking for buys and I'm trying to catch the wick of this week's candle, I need last week's candle to be showing the same momentum that I want to carry over to this week, because I'm going to be waiting for a wick to wick into that body of last week and then catching this week's wick. It'll make sense in a minute. So since I'm looking for buys, I need last week's candle to be bullish, right? So you can see that this is a big bullish engulfing candle. It's a strong weekly candle. Most likely this week is not going to completely overtake this and create a bearish engulfing candle. 90% chance it's not going to do that. Most likely what's going to happen is it's going to wick down a little bit before it turns around and flip back bullish, continuing the momentum of last week. So step 3, you're going to grab that Fibonacci or that Gann box, and you're going to go from the bottom wick to the top wick. That's step 3. Grab the Gann box or the Fibonacci and go from the bottom wick to the top wick. Step 4, grab you a rectangle and then mark off the 50 to 75 zone, right? So some people call it the golden zone. You can call it whatever zone you want to call it. Just mark off the 50 to the 75. On my rectangle, I have this. I have extended left and extended right. You don't have to do that. If you take it off, it'll look like this. But I like to have mine like this. I don't know why. I just like it. So that is step 4. Step 5, what you're going to do, you're going to place an alert right here at the 50 level, right? So you're going to hit this button, the cross symbol right here, and it'll place an alert at the 50. Technically, you can take the trade once it hits the 25, because not all the time it's going to have a deep pullback on the lower time frame, or it's not going to have a long enough wick to hit the 50 area. That doesn't happen all the time. A lot of times it will just hit the 25 before it takes off. You can, if you want to, if you back test and forward test, price hitting the 25 before you enter the trade and you like it, you can do that too. But me personally, using this strategy for a few years, I like to wait for the wick to hit the 50 area before I get in. That's just something I like to do. I found out, or I've seen that or noticed that the longer the wick is, the more likely it's like to basically hit your take profit. Because imagine if the wick comes way down here, by the time the candle flips back to match the last week's candle, I'm already at a 1 to 2. So I love long wick candles. But like I said, if you want to take it at the 25, you can do that. But what I'm teaching you is to wait for price to hit this golden zone down here and then start looking for a trade. So step 5 is to put the alert at the 50. Step 6 is going to be When price gets to this 50 and it triggers your alert and sends that alert to your phone or the email or whatever you have, you're going to go down to the daily time frame and make sure that the daily is also above the 50 MA, matching the same thing that the weekly is doing. You're going to go down to the daily and make sure it's also above the 50 MA. So let me just fast forward this real quick. And then I don't know if it would have triggered it exactly right there, but let's go down to the daily. And yeah, it probably would have triggered it. If you had it right on the 50, most likely it probably would have triggered it. So on the weekly, once you see that the new candle it'll be bearish at first. It's always going to do that. It's going to, if your candles are red and green and red is bearish and green is bullish, it's going to be red first because it's creating the wick. It's creating the pullback and the retracement on the lower time frame. So the candle's going to be red on the weekly. Once it hits at 50, you're going to go down to the daily and make sure that the daily is also above the 50 EMA. That is important. And then also at the same time, you will notice that the daily is just creating a beautiful pullback. That's all the daily is doing. You have the weekly above the 50 MA, and last week was a bullish engulfing candle. But once that new week candle creates that wick, it's really just a beautiful pullback on the daily time frame. So once you go down to the daily, you can see that this previous resistance is becoming support this week. And that's what the fucking wick is. And a lot of people don't even like really teach people that, you know what I'm saying? And that's really all it is. The wick that we're catching this week is just a beautiful pullback on the daily. That's all it is. So once you go down to the daily time frame and make sure that it's above the 50 MA, you will also notice that it's just a beautiful pullback, creating this previous resistance into new support. That's all that's happening. That was step 6. This is going to be step 7. Once you notice that price broke the 50, it triggered your alert, and that the daily is above the 50 MA, this is step 7. Go down to the hour time frame. This is step 7. Go down to the hour, because now we're going to start looking for an entry. So now we're on the hour time frame. It barely broke right here, but I'm still not looking for it because I like for price to come off into the zone and close into the zone. So that's another thing. Like I said, you can back test this in whatever you like. Once you back test it and it works for you, you can do it. Yes, you can wait for price to barely puncture the zone and then start looking for entries. Yes, you can do that. I'm just teaching you what I do that makes me a lot of money and is proven to be successful. So what I'm going to do when I teach you is I'm going to tell you to wait for price to start closing into the zone, because yes, your alert probably would have went off because it did break the 50, but wait for price to come down like that. Wait for that to happen. Wait for price to start closing in that zone. Now you know it truly hit that zone. And like I said, if you want to wait for price to just puncture it, then start looking for entries, that's on you. And then it didn't even give an entry anyway. So the way I'm teaching you, you wouldn't even fucking got into that trade because it didn't even give us an entry signal yet. But I know a lot of people will be like, oh, well, it hit the 50. And he said, well, when it hits the 50, you can enter. No, that's not what I said. When it hits the 50, you want to start looking for an entry. It's not when it hits the 50, you can enter. No, when it hits the 50, you start looking for an entry. We don't have an entry signal yet. There's no trade. So again, step 7 was waiting for price to get to the 50. Now that price is legit, like honestly in the 50, it's closing into the golden zone, right? It's closing in this zone. Now we can really start looking for entries now. So step 8, I'm going to be looking for something called a TCT, a trend continuation trigger. Basically, it's going to be a trigger that I'm waiting for to let me know that the trend is about to continue. So once price gets into this zone, I'll show you exactly what I'm looking for. So right here, I can tell that there is a structure point right here. And trend continuation trigger is basically the same thing as a shift or structure. I know you probably heard of that before. That's a term that a lot of people use. It's basically the same thing. A shift of structure is the same thing as a trend continuation trigger. It's the same exact thing. So I'm going to actually go ahead and put that there so that you know that's a trend continuation trigger, or matter of fact, go ahead and put that there. So it's a trend continuation trigger or a shift of structure. Same thing. I just like to call it a trend continuation trigger, but it's the same thing as a shift of structure. So I'm going to wait for this purple line to be broken, and not just for price to break it. Price has to close above it. And this is a real trade that I took. So it's not going to just be perfect. I'm really showing you exactly what I did before I entered this trade. I'm not going to just show you, oh, when price, the trend continuation trigger happened, I got in here. No, I'm letting you into the mindset I had when I actually took the trade. This is exactly what I was looking for. So let's fast forward a little bit. And then there you go. You have a trend continuation trigger, but this is the thing. I also need price to close above the EMA. So just because the price had a TCT or a shift of structure, that doesn't mean I'm going to enter. I also need for a 1 hour candle to close above the 50 EMA. So yes, this is a structure point that I wanted price to break, a shift of structure. The structure is shifting. You see this structure point here, price closed above that. Yes, that did happen, but you also need to wait for an hour candle to close above the 50 EMA. It did not close above the 50 EMA, so there's no trade to be taken. Let's continue. No, price still did not close above the EMA. We're not taking anything. I'm not taking a trade yet. Like I said, yes, a TCT did happen. A trend continuation trigger happened. A shifter structure, whatever you want to call it, it happened. But price did not close above the 50 EMA. And by the way, this is step 9. Step 8 was just waiting for the trend continuation trigger. So the TCT already happened. But now step 9 is making sure that the hour candle closes above this EMA. If it was sales that you were looking for, it'd be the same thing, but vice versa. You would be looking for a candle to close underneath the EMA. But since we're looking for buys, I need an hour candle to close above the EMA. So I'm not taking any fucking trade until the 1 hour candle, at least one of them, closes above the 50 EMA. See, it's still not closing above the 50 EMA, not taking a trade. And this is what I think a lot of people need help with. It's the patience, it's the discipline. You could take the trade now and it'll most likely still go in your favor, but it's just about owning the strategy. I own this strategy. This is my shit. I own it. I'm waiting for certain things. I'm not sweating it. If this doesn't happen, I'm not taking a trade. I'm waiting for this to happen. I'm being patient. I'm being disciplined. This is what my trading plan said. This is what the strategy says to do, because this is what I back tested hundreds of times. And this is what I forward tested and really tested in the market hundreds of times and made a shit ton of money. So this is just something I've noticed that I want to wait for, because it makes my win rate like 10% higher. So I'm going to wait. I don't care what happens until the 1 hour candle closes above the 50 EMA. I don't care about a trend continuation trigger, shift the structure. That shit is all irrelevant. A 1 hour candle has to close above the 50 EMA, period. Still nothing. Still nothing. And then also it's about 5 to 6 p.m. So I wouldn't even be getting to a trade right now anyway. So, okay, right there. Price broke above the 50 EMA, right? but it's still like 8 p.m. And sometimes I will take a trade early like that. It's like sometimes I will be a risk taker and like, fuck it, I'm gonna get into the trade, but it's still pretty early. I don't really want to get into a trade at around 8 or 9 p.m. I like for momentum to be in the market, but technically you could have taken that trade once price closed above the 50 MA. But I'm letting you into what my mindset was at the time, what I was thinking at the time. And at that time, something else that I like to wait for didn't happen. Whenever a candle closes above the 50 MA, I like to wait for the high of that wick or the low of that wick to also be broken. And you can see it respected that high of that candle, right? You can see it respected it. It did not break that wick. And this, like I said, this is just something that I've noticed. This is just, I'm being completely transparent with you. I could tell you just, oh yeah, price closed above this, then you can take the trade. Technically you can, but this is what I do personally. I'm not going to lie to you. I'm not going to sugarcoat. This is what I do personally. I want price to close above this 50 MA. It's ready to go. But then also I want the wick of this candle to be broken, showing me that, oh yeah, that bullish momentum is about to continue going up. But it didn't break that wick of this candle. So I'm not taking the trade yet. Right there. That is when I would take the trade. You can see that price broke above the 50 MA and it closed. That's technically the shift of structure and the trend continuation trigger. That's technically, that was it. But I don't want to get in really. I want the wick of this candle to be broken. It didn't break it on this candle, but you see what happened on the next one? It closed above the 50 MA again, and it broke that wick of this candle. Now I'm going to get into the trade. So I forgot to mention that would have been step 10. Really don't even have to count that as a step, but that could have been step 10. Wait for a price to break that wick now. You don't have to. This is just something I do. Now you can get into the trade, place the trade. Stop loss would have been below these. Let me put that back on here. And my stop loss would have been right there. And then I would have went for a 1 or 2. Which, like I said, I'm not going for 1 or 2s anymore. I'm about to just start holding the weekly candle until about 2 to 4 hours before market close. So I can go ahead and start taking these 1 to 3s, 1 to 5s, 1 to 6s, because this trade was really like a 1 to 6, but I got out at a 1 or 2. But I mean, who cares, man? It's going to hit the take profit. So since I'm in the trade now, let's just let it play out. And there you go. You have the take profit hit. Another thing that I like to do, let me go back real quick. I'm giving y'all all the sauce, bro. Everything. I'm not going to hold anything back. Another thing that you can do is when price did this right here, when we got in, before you enter the trade, this is something you can do. You can go down to this right here where it says metrics, and you can click it and then go to technicals, right? You'll go to technicals, and then you would go to the week, and you see 1 week is strong buy. That lets me know that, oh, even TradingView is using all their analysis, 10 to 15 moving averages, 10, like a good 10 oscillators right here. And even the metrics in the analysis that TradingView even did is also agreeing with what I'm saying, right? So that's almost like having a whole other person like agreeing with, oh yeah, you're right. What you're looking for, we kind of agree, using all of these different metrics and putting all of these together. This is what, a good 20 to 30 different things put together. There's like 20 or 30 different confluences all coming together. And when I go to the week, sometimes I'll look at the month, the week, the day, and I see that all of it is buy. And the week is a strong buy. So that gives me even more confirmation and more confluence that what I'm thinking about doing is correct. Not saying that all the time this shit is correct or it's right, but it's just giving me even more confidence that, yeah, what I'm seeing in the market, TradingView is also seeing. And then not even just that, also what you can do is right here, as soon as you got that entry, you can go to, let me see where it is, right here to finviz.com. So you see up here, it's finviz.com/Forex. And you would go here, you would click weekly, and then whatever trade or whatever pair that you're trading, you would just make sure that it was matching what you're trying to do. So on Swiss franc JPY, I was looking for buys, right? So I would have came down here to technicals, like when I was entering, right before I enter, I would go down to technicals. I would go to week. I would see that it's a strong buy, and I'd be like, okay, that's good. That's showing me that TradingView is also agreeing with my analysis. Then I would go to FinViz, and then it's finviz.com/Forex, and then I would click the week, and then I would look at Swiss franc JPY. And sometimes if it's not up here, you can just come down here and check Swiss franc and the JPY. So even though both of them are in the red, the Swiss franc is stronger than the Japanese yen. So that's showing you that price will be going up, especially if you see the Swiss franc in the green up here, like AUD is green. If you've seen the Swiss franc up here and then a JPY red, that's another indicator that, or in another confluence that price is about to go up. So like I said, when you were at this point, let's go back again, because I want y'all to really understand this. When you were at this point, before you enter, you would go down here to the metrics, and then you go to technicals, and then you would go, since I'm looking for buys, right? I would go to FinViz, and I would make sure that the Swiss franc was stronger than the JPY, and I would click weekly right here. You have 5-minute, hour, daily, weekly, monthly. I would click weekly and make sure that the Swiss franc is stronger than the Japanese yen. And like I said, right here, they're both red, but the Swiss franc is not as weak as the yen. So that's showing that price will go up. But it's even stronger if the Swiss franc would have been green and the JPY was red. So like even this as an example, JPY, GJ, British pound, JPY, you see that the British pound is red. It's negative 0.04, and the yen is also negative, but the British pound is not as weak as the yen. So you see right here, what is it? The GBP JPY is bullish. It's green. Why? Because the British pound is weak, but it's not as weak as the yen. So GJ is bullish. You look at Euro GBP. GBP is slightly stronger than Euro, and it's not even that big of a difference. You see it's 0.04 and negative 0.04 and negative 0.07. It's not even that big of a difference. But since Euro is slightly weaker than GBP, which Euro's on the left in this pair, right? Since it's slightly weaker, it's slightly bearish. So like I said, before you even entered, this is what I do at this point. Before I even press buy, right? I would go down here to the metrics, go to technicals. I will look at week, right? And I see that the 1 week is strong buy. And then I would have went to FinViz and seen that Swiss franc is stronger than JPY. And I would have known that, oh yeah. So the technicals on TradingView, using all of these different metrics, right? The analysis on TradingView is also agreeing with what I'm trying to do. I'm looking for buys. TradingView is also saying, yeah, it's pretty bullish. And then I would go here to FinViz and see that, okay, the Swiss franc is stronger than the Japanese yen. It's also bullish. I'm going to get into that trade. And then, like clockwork, it hits that take profit. And when you go to the weekly, it would look like this. So let me go to the weekly real quick, and I'm going to show you what it looks like on the weekly. And on the weekly, this is what it was, right? So matter of fact, hold up, let me go back down here real quick. Let me get that off because we don't need that. But let me put the blue circle on here so you can see on the weekly time frame where we got in. Make it a little bigger. And then on the weekly time frame, that's where we would have got in. So I took a 1 to 2. And also real quick, the reason I said I like getting to the wick at the 50 is because when you get an entry on the wick, once it gets to the 50, by the time the candle flips back bullish to match the momentum of last week, I'm already at a 1 to 2. Like, look how much more that candle pushed up. Like, I missed a 1 to 6, easy 1 to 6. I could have just let that whole candle play out until about 2 or 4 hours before market closed on Friday, and I could have took a 1 to 6. But if you would have just took price, if you would have entered, let's say right here, right, it would have came down to the 25, and then you probably would have entered like right there, and then let's say that your stop loss was behind the wick, because I like to put my stop loss behind the wick. A 1 to 2 would have happened. You would have barely got a 1 or 2 on that whole candle. You may have had to wait for the next week. Yeah, you would have had to wait for the next candle to retrace and give a wick and then push up to get a 1 or 2. And then, I mean, yeah, you could technically, I mean, it's easy to say this after the fact. You could have put the stop loss right here, but that's not promised that price won't go down to that 50. So I like waiting for the 50 to get touched and then get into the trade. And like I said, where I entered on the wick, by the time the price gets back up here and starts to flip back bullish, I'm already at a 1 or 2. So technically I can get out, and you have that much more candle and momentum to go. And that's why I tell you, get in on the 50, not the 25. Yes, you can get in on 25 because price won't always leave a wick all the way down to the 50. It's not going to always retrace all the way down to the 50. Sometimes it will hit the 25 or not even hit the 25 before it starts to shoot back up. But if you wait for price to get down to that 50, right, to that golden zone, you get in here, like I said, by the time price starts to flip back bullish, you're already at a 1 or 2, so you can get out. You don't even have to wait. You can see it. I basically won the trade just on the wick. Like, I mean, I won the trade was over just on the wick. Just on the wick. I don't know if y'all really understand what I'm saying. The trade was won on the wick. Soon as the candle start to flip back bullish, I was already out of the trade. One thing I'm about to start doing, though, like I've been telling people, I'm going to start just waiting until about noon on Friday, about 4 hours before market closes, and then exiting the trade and taking profit, because like I said, this was easily a 1 to 6 if I just waited until a few hours before market close. Just get in on the wick and then let that weekly candle do what it's doing. I don't remember what day I got in on this. This could have been like Monday night, Tuesday morning. I don't remember. But I could have just got into this trade. Let's say it was Monday night. I could have got into that trade and then just lived my fucking life and did what I like to do, travel, spend time with friends and family, do whatever I want to do, go to crazy restaurants, different national parks, whatever you like to do. You could have really just placed that trade, go live your life. Look at the charts about noon. I'm in Texas, so noon was just 4 hours before market close here. Just 4 hours before market close, and you would have been up a 1 to 6. And when I say 1 to 6 means risk to reward ratio. So if you risked $100, you would have been up 600 by Friday. If you know what I'm saying, I don't know like who's watching, but if you are new to trading, that's what risk to reward ratio means. I'm risking, what am I risking to get rewarded later, right? So I'm risking, let's just say if you risked $1 by Friday, it would have been 6. If you risked 1,000 by Friday, it would have been 6,000, right? So if you risk 1,000 on Friday, so if you risk 1,000 on that Monday night or Tuesday, whenever I got in there, by Friday, a few hours before market close, that 1,000 would have been 6,000. I made 7,000 on that trade, but if I stayed in the trade, I would have made $20,000 on that one trade. So I'm like, now, like, I'm not greedy, bro. I mean, I worked for a long time and I was broke before and everything. So I'm not greedy. I'd take the $7,000 for one trade. I'd take that, could gladly take that. But then I'm thinking like, damn, I could have made 20,000 on that one trade. On that one trade, I could have made 20,000. So you know what I'm about to start doing? I'm not aiming for just a 1 to 2 anymore. I'm about to start letting that whole weekly candle play out, because when the weekly candle has momentum, that motherfucker has momentum. When you can enter the wick of the weekly candle and let it play out, 1 to 4, 1 to 5, 1 to 6. I seen one trade I had a few months ago. That shit was like a 1 to 8 or 1 to 9, something crazy. I'm like, damn. So that's just something I've been thinking about lately. I'm just letting y'all into the way I think. Like I said, you could have got in right here and got the 1 to 2. I'll show you where the 1 to 2 was again. The 1 to 2 was right there. So you could have entered on the wick and basically made all your money on the wick. That's basically what I did. I made $7,000 on just the wick. I didn't really even need it to flip back bullish before I had my take profit. I made the money on the wick. I mean, it's hard making money on the wick on the hour time frame, or on the hour candle, on the hour wick, on a daily wick. You can do it. It's not impossible, but the easiest way is to make the money on the wick of the weekly candle, and then the rest of the week, that's just extra money. So there's something else I've been thinking about, and I'm letting y'all know right now. That's the sauce. It's looking like that's the sauce. That is like the secret sauce that I'm about to start doing, man. And if y'all want to start catching 1 to 4s, 1 to 5s, 1 to 6, like you see here, enter the trade on the weekly wick and just let that fucking candle play out. When I trade, I'm looking for so many little small technical things that it's hard to just go over on a video, bro. This is my first time really just trying to teach people. So I'm not just a fucking a professor or anything. So I can't even, I'm sure it's like small little details I may be forgetting. But when I'm in the zone and I'm really looking for trades, a 1 or 2 is good enough, because I'm winning at, like, really, I'm not even gonna bullshit you, like a 76, 77% win rate. So now I'm like, man, the 1 to 2, I could be taking 1 to 5, 1 to 6, 1 to 7s, 1 to 4s, like clockwork. So like I'm telling you, the sauce now is I'm not getting out at 1 to 2 anymore. I'm about to start just riding that fucking candle until Friday. When you trade on the weekly, like I'm going with the motion. I'm going with the flow. It's like the ocean. There's so many waves. You can just throw something in the ocean and the waves are going to just carry it that way, bro. That's just how it is. Same thing with the weekly time frame. You can just get into it and it's just going to carry you like it's the fucking Pacific. You could throw a bottle into the ocean, it's just going to carry with it. Whichever way the current is going, whichever ways the waves are going, it's going to just carry that bottle that way. And it's the same thing when you are trading the weekly time frame. It's just you get into the trade and it's like you threw a little plastic bottle into the Pacific. It's just going to push it with the current. I'm going to be starting a free community. It's not going to be paid or nothing. It's going to be a free community. I don't know if it's going to be a Discord, a Telegram, or whatever. I'll send the link out to people whenever it's ready, if you want to follow it. And then you can learn the strategy a little more. I also have a swing trading strategy, but with that strategy, I may catch 1 or 2 trades a month. But with this strategy, I can catch 1 to 3 trades a week. And then they're 1 to 6 trades. So this 1 to 6 trades is like somebody else catching 3 on this one trade. So if I catch 2 trades out of 1 to 6, that's like somebody scalping for 4 hours, 5, 6 hours a day for 5 days a week. Me just catching 2 trades is equal to them doing that. So I'm going to be starting a free Discord or a Telegram or something. It's a free community for people to come in. You can watch the trades that I'm going to be taking. Like I said, I'm not a teacher. I'm not a professor, so I may not do the best job just doing this breakdown or teaching it on a video. So you can come there and you can actually watch me take these trades. You can ask me why I took the trade, why I entered it, which ones I'm looking for. I'll be telling you every Sunday. I'll be showing you like weekly watch lists, like Weekly Wick watch list. What am I watching for this week? Follow my Instagram. So my Instagram is, all right, so right here, MDiesel, at MDiesel, that is my Instagram. It's my personal Instagram page. If you follow me over there, I give a lot of gems on there too. I give a lot of sauce on that Instagram. I'm not the biggest social media influencer or nothing like that. Cause I like I said, bro, I live life. I go travel and shit. I don't really just be on social media like that, but that's about to change. I do want to help a shit ton of people. I want everybody to start making a lot of money. It's so much money out here for everybody to get. It's trillions of dollars out here for everybody to get. Trillions of dollars. I'm not holding anything back. Go to my Instagram and follow me there. I have other little updates that I need to let people know about. I will be letting you know on there too. On there, you can send me a DM. You can message me, ask me questions about the strategy. You can ask me anything. Honestly, I don't give a fuck. You can ask me whatever you want to. So right here, this is my Instagram at mdiesel. Right here at mdiesel. That is my personal Instagram. Like I said, you can DM me, ask me any questions about anything. You want to learn how to get into this wick of the weekly and get a 1 to 6. You want to be able to tell your boss to go fuck himself. You don't want to work for somebody. You want to have the freedom. You want to have time freedom. You want to be financially free. Go ahead and join the community when I started. Follow me on Instagram. And with that being said, I'll see y'all when I see y'all. I'm out.